Now, when it comes to you picking the right investing strategy, the first thing you want to remember when you're investing in stocks is you're really not just investing in a stock. You're investing in a company. Because a lot of times when people think about investing, they're thinking about, I'm just going to put my money into this ticker symbol and I'm going to hope that this ticker symbol goes up. But what you have to remember is, what are you actually buying when you're buying that ticker symbol? You're buying a piece of ownership in a company. So if you really want to be an investor, not a trader, because most people are traders when they think about putting their money in the stock market, I want you to be an investor. An investor is somebody who's buying ownership in a company because they believe in the long-term vision and the long-term potential of this company. A trader is somebody who's putting money into this ticker symbol and they're hoping that the stock is going to go up in the next week, in the next month, or in the next 6 months. I want you to be a long-term investor, because over the long term, this wealth that you can build as an investor will vastly outpace the amount of money that you can make as a trader. Now, investing is not as attractive as trading, but you can make a lot more money as an investor than a trader. But that requires you to have the patience and the financial discipline to be an investor. Now, when you're trying to make this decision of what it is that you invest in, the next thing that people try to figure out is, well, what stock should I buy? What's going to be the next Amazon? What's going to be the next Nvidia? But you might not have to find the next Amazon or the next Nvidia or the next Tesla in order to make money. In fact, sometimes all you got to do is put your money into the stock market. And I'll tell you why. Because what ends up happening to a lot of people who are trying to find the next hot stock is they don't know how to research their company. Because if we go back around a decade or so ago, one of the hot companies out there that was innovating, that was beating the competition, was none other than Bed Bath & Beyond. Bed Bath & Beyond was beating estimates. They were buying out their competitors, and they were the top dogs when it came to innovation. So if you believed in the long-term vision of Bed Bath & Beyond and you continued to invest your money into that company, well, today you would have nothing, because now Bed Bath & Beyond is, of course, bankrupt. The alternative to, of course, investing in an individual company would be to invest your money into a fund. For example, there's a group called the S&P 500, which is a group of the 500 largest companies in the stock market. And there are funds that will give you exposure to this S&P 500. So now, instead of going out and trying to invest in these 500 companies, you can invest in a fund that will give you exposure to these 500 companies. It's a little bit more of a set it and forget it system. Now, the advantage of this is that Bed Bath & Beyond was a part of the S&P 500 back when they were that innovative top dog. But then, as they started to struggle, they got kicked out of the S&P 500, which meant if you're investing into a fund that was giving you exposure to the S&P 500, you didn't have to do anything. Bed Bath & Beyond automatically got kicked out of that fund, and it was replaced by another stock. And this is where now what you have to decide is, do you want to be the person who's spending the time, effort, and energy to research the individual company and to keep up with the company and to keep investing in that company, which is fine, or do you want to be more of a set it and forget it investor? And this is where I have two strategies when it comes to stock market investing that you can consider. One is being an active investor, and one is being more of a passive investor. Now, when I say active investor, I don't mean that you're trading stocks. I mean that you're investing in individual companies like Bed Bath & Beyond, although that's a bankrupt company, but you're looking for the individual company to invest in. That's what active investing is. Passive investing is you're investing your money into funds. Things like the S&P 500, where now it's set it and forget it. Now, what I say is that 98% of America should be a passive investor, because most people are not interested in putting in the work. They don't want to put in the time. They don't want to do the research and put in all that effort to research the right companies and then keep up with their companies. But if you do, that's fine. Now, you could pick a hybrid of these. I personally am both. I have a passive investing strategy and I have an active investing strategy where I'm looking for individual companies here, and I'm also investing in funds here. But you have to find what is the right strategy for you and then stick with it. Once you start thinking about if you want to be more of a set it and forget it investor, or if you want to be more of a I want to invest in individual companies investor, the next question that you have to ask is, okay, if I want to be either one of these, how do I want to get paid? Do I want to get paid through seeing the value of my stock market portfolio rise? Or do I want to get paid some cash flow from dividends? And this is now a question that you're going to have to answer for yourself. Personally, I like cash flow. The bulk of my investments are cash flow purposes. I have a system. I'll tell you the different things that you can invest in here on the passive side in just a minute. I have a system where every Wednesday, money leaves my checkings account and is automatically invested into my portfolio of funds. I invest in ETFs. So I invest in these ETFs, and the bulk of these ETFs are cash flow producing, meaning they're dividend paying ETFs. That means every Wednesday. Why did I pick Wednesday? Because it's in the middle of the week. There's no secret sauce here. It's just a random day that I picked. But every Wednesday, money is automatically invested into these funds, which are buying me more cash flow. So every Wednesday, I'm buying more of these cash flow producing assets. And then every quarter, I get a dividend from these funds. A dividend is a cash payment that a stock or a fund gives you just for owning the investment. You don't have to sell your investment to get paid. You just have to own the investment. Now, in the beginning, if you start investing for dividends, you're going to get very little dividends unless you have hundreds of thousands or millions of dollars to start investing. If that's the case, great. But if you don't, well, you're going to start off by getting a little bit of dividends. That's how it works for most investors. But if you stick with it, if you keep investing money every time you get paid, what you notice is that next year you're going to make more dividends than this year. The year after that, you're going to make more dividends than today. The year after that, you're going to make even more dividends. And 10 years from now, you're going to be able to have a substantial stream of income just through your cash flow because you kept investing in money. And then the key is, as you start to get those dividends, you automatically reinvest those dividends to buy more cash flow producing assets. So what happens for me is every Wednesday, money leaves my checkings account and it goes to buy me these ETFs. Most of them are paying me with cash flow. Then every quarter, on top of my Wednesday investments, I get this dividend check. And I take that check and it goes right back into my investments to buy me even more cash flow. That's how my passive investing works. Now, for my active investments, some of these are paying me with cash flow. Some of these are more on the speculative side. But my goal here is to invest in companies that I believe in for the long term. But what you have to decide is, do you want to be investing for that type of cash flow, or do you want to invest in companies and funds that you're hoping are going to grow over the long term? If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.